Input tax credit. So here, this person is a dealer. Okay, so this guy is a dealer, say A. He is buying goods from another dealer or a manufacturer, say B. Okay, so when he buys goods from dealer B or manufacturer B, he has to pay the amount plus GST, right? I'm taking in general, GST you have to pay. The dealer A will pay a GST to dealer B, right? Say, for example, he is paying GST as 1,000 rupees. He is buying certain goods, maybe 10,000 rupee worth goods he is buying. When he buys 10,000 rupees worth goods, and if GST percentage is 10%, the GST that he pays is 1,000 rupees, right? So in total, dealer A has to pay 11,000 rupees to dealer B, and dealer B will pay the GST amount to CGST or SGST department, depending on what kind of transaction it is. Okay, now dealer A is selling the goods to another person. Dealer A is selling it to someone. Let it be an end customer or end consumer. Say end consumer means people like us. People like us means we don't have a business. We buy it. You are not reselling it or reselling the items, right? So what you're doing is you buy it, you buy the items and you use it. You are the consumer. Dealer A will sell the same goods to end consumer for 15,000. So what is the profit that he is making? Dealer A is making on this product. What is the profit that this person is making? Can any of you tell me? He purchased for 1,000 rupees, 10,000 rupees. He is selling the same product. Okay, he is selling the same product to the end consumer for 15,000. So what is his profit?
5,000.
5,000 is his profit. Okay, so how much this end consumer has to pay as GST? He has to pay for the entire 15,000. Entire 15,000's 10% is what the end consumer will pay as GST. Okay, so he is paying say 1,500 as GST. So in this given example, dealer A is paying 1,000 rupees as GST to dealer B. That tax is called input tax credit. Input tax credit. Now, end consumer is paying 1,500 rupees as GST to dealer A. Okay, so end consumer is paying 1,500 rupees as GST to dealer A. This is called output tax. Output tax for dealer A. Okay, so basically if you look at it, it is like input tax credit is in a way that's the GST paid by dealer A, and output tax is the GST collected by dealer A. What is the net GST that the dealer A will deposit with government? What is the net GST dealer A will deposit with government? That is output tax minus input tax or input tax credit. So what is input tax? Input tax is the GST that dealer A has paid to to dealer B or to whomever he is purchasing his products from. Whereas output tax is his consumer, his customer. Dealer A's customer comes and purchases the item from dealer A. At that time, the tax paid by the consumer on the selling price is the output tax. So here, 10,000 rupees is the amount. 10,000 rupees was the cost price for dealer A. Cost price for dealer A was 10,000 rupees. So on this 10,000 rupees, he has paid 10% GST, which was 1,000 rupees. When dealer A sold it to end consumer, the selling price for dealer A was 15,000, and he collected 1,500 or 1,500 as GST from end consumer. Okay, so what is the GST that dealer A has to go and deposit with the government? That is called tax liability of dealer A. That is tax liability of dealer A. Okay, this is dealer A's tax liability. How will you calculate it? Output tax minus input tax. So what is the GST that dealer A has collected from his customer minus what is the GST he has already paid to the manufacturer or from whom he has purchased the products. So if a question is asked in which if they are asking what is the input tax credit for dealer A, what is the output tax for dealer A, and what is the net tax payable or tax liability. Okay, tax liability of dealer A. Then input tax credit for dealer A is the GST that he paid at the time of purchasing the product. So for the first one, how will you do it? His cost price of dealer A was 10,000. On that, you are calculating the GST. You are calculating GST and you will get, it was given as 10% GST. So 10,000 into 10 by 100 is 1,000 rupees. So this 1,000 rupees is the input tax credit or simply input tax for dealer A. Now, second part of the question. What is the output tax for dealer A? Price at which dealer A sells the article to end consumer. It was rupees 15,000. So what is the GST on that? 15,000 into 10 by 100, which is 1,500. Okay, so this is the output tax for dealer A. Okay, now third thing is the tax liability of dealer A, or how much tax dealer A has to pay at his location, at his city. So that is, what is the output tax? It is the output tax minus input tax. That's the formula. In output tax minus input tax. What is output tax? 1,500 minus what was the input tax? It was 1,000 rupees. So the answer is 500 rupees. So dealer A has to pay at his locality income tax office 500 rupees. Okay, so he has to pay 500 rupees. Let A, B, and C be three traders belonging to different states. Trader A sells some goods or services to trader B for rupees 500, and trader B sells the same goods or services to trader C at a point at a profit of rupees 200. Calculate the tax liability of B if the rate of GST is 12%. Rate of GST is given as 12%. So A, B, and C are three traders belonging to different states. Different state means what is coming? IGST is what we have. We don't have CGST, we don't have SGST, only IGST. Now, trader A sells some goods and services to trader B. Okay, so trader for rupees 500. So the selling price is rupees 500, right? Rupees 500 for whom? For trader A. Trader A is selling at 500 rupees to trader B. So what is going to be the GST here or IGST here? 500 into what is the percentage? GST is 12%, 12 by 100. So when you cancel it, what is that? 12 into 5. What is the answer? So this 60 rupees is, okay, wait. Now for trader B, let me take it as for trader B. So trader B, before that, let me draw some figure. This is A. A is selling to trader B. Okay. So now trader B's cost price is 500. Cost price for trader B is 500. Okay. And what is input tax credit for him? Input tax credit for trader B. How much he paid as tax? 60. 60 is the input. Who is paying tax? The buyer. Buyer is always paying the tax. Okay. Always buyer pays the tax. And here 60 rupees is the input tax credit that trader B is paying to trader A. But eventually trader A has to go and pay it to the income tax department. Now, what is the next step? Trader B sells the same goods to trader C. So B is selling it to C. Okay. At what? At a profit of rupees 200. So here, trader B is selling at profit is 200 means SP will be 500 plus 200. 500 plus 200 would be 700 rupees. Okay. So what will be the GST or IGST for IGST in this case? So 700 into 12 by 100. What is that? I think it is 84, right? It's 84. So 84 rupees will be the IGST for trader B. For trader B, it is going to be 84 is the total tax minus input tax credit, which is 60, and that is 24 rupees. So in one step, if you want, you can calculate it, because if they are asking just to calculate what is the output tax for or tax liability for trader B, you can just calculate on the profit 12% is the GST. So that is also 24. A product is sold from Kanpur, UP to Banaras, UP. So it is intra-sale. Both Kanpur and Banaras are two cities in UP for 12,000, and then from Banaras to Ranchi. So that's Ranchi is in Jharkhand. So that becomes interstate transaction, two different states at a profit of 4,000. If the rate of GST is 18%, find the net GST payable at Banaras. So you need to calculate the net GST payable at Banaras. The product is sold from Kanpur to Banaras. So Kanpur and Banaras are two cities in UP. So this is going to be an intra-state transaction. So when it is intrastate transaction, you need to calculate CGST and SGST. So 12,000 is the selling price and GST rate is 18%. So 9 by 100, 12,000 into 9 by 100 is going to be CGST and SGST. That amounts to 1,080. Okay. So this is the CGST and SGST. Now, the product is from Banaras. The product is again sold to a dealer in Ranchi at a profit of 4,000. So when you are selling from Banaras to Ranchi, what is the selling price becomes? Selling price becomes 12,000 plus 4,000 because profit is 4,000. So 16,000 is the selling price. So you need to calculate the net GST payable at Benares. Okay, so net GST payable at Benares is output tax minus input tax. What is output tax? I have not yet calculated. That is IGST is equal to 16,000 into 18 by 100, which is going to be 16,000 into 18 by 100 gives you 2,880. So net GST payable at Benares will be output tax minus input tax, which is 2,880 minus 1,080 plus 1,080. You need to add both GST and SGST. Okay, so CGST and SGST was the input tax credit. What is the input tax credit? Input tax credit is 1,080 plus 1,080. So here you need to subtract this. And what is the figure that you are going to get? 2,880 minus 2,160, which would be 720 rupees. Same thing you can calculate with using the profit. You can calculate tax on profit. So another way of doing the same problem, that is net GST payable at Benares would be, just need to calculate tax on profit. Tax on profit. What is the profit? Profit is 4,000 rupees. So 4,000 into 18 divided by 100, which is again, this is also 720. So you can do net GST payable at Benares in one of this way, either using output tax minus input tax credit approach or using tax on profit. So both ways will give you the same answer. Next question is, an article is sold from Jaipur to Indore for rupees 5,000 and then from Indore to Bhopal, if the rate of GST is 18% and the profit made by the dealer in Indore is rupees 2,000, find net GST payable by the dealer in Indore, cost price for the dealer in Bhopal. Assume that the dealer in Bhopal is the end user. So here the question starts with, an article is sold from Jaipur to Indore. So this is going to be an interstate transaction because Rajasthan and MP. So two states are involved. So here you need to calculate IGST. Okay. And what is the selling price? Selling price is 5,000. So selling price is 5,000. And what is the IGST? IGST would be 5,000 into, what is the rate? 18%. 18 divided by 100. That will give you 900 rupees. Okay, so IGST is 900 rupees. Now in the next step, what happens? The Indore person. So Rajasthan to Indore is what the first sale is. Then from Indore to Bhopal. Indore and Bhopal are in Madhya Pradesh. So Indore to Bhopal is going to be an intra transaction. Okay, so intrastate transaction. So here, intrastate transaction. So since it's an intrastate transaction, first we need to see what is the selling price of Indore dealer or Indore trader. What is the selling price of Indore dealer? Indore to Bhopal. If the rate of GST is 18% and the profit made by the dealer in Indore is 2,000. Okay, so the selling price becomes 5,000 plus 2,000 because 2,000 is the profit. This becomes 7,000 rupees. Net GST payable by the dealer in Indore. So net GST payable by the dealer in Indore is, you can calculate it in a different way also. There are two ways. One way is you can calculate CGST and you can calculate CGST and SGST, and then you subtract output tax minus input tax. Or the easiest approach is find the tax on the profit. So here profit is 2,000 rupees. Profit is 2,000 rupees. What would be the tax on profit? Tax on profit is going to be 2,000 into 18 divided by 100. What would be that? It is going to be 360, right? This is going to be 360. So tax on profit is 360. So 360 is the net GST. So net GST payable at Indore. Okay, payable by the dealer at Indore is rupees 360. Okay, so that is the first part. Now, what is the second part saying? Cost price of for the dealer in Bhopal. So what is the cost price for the dealer in Bhopal? Let's calculate that. Cost price for the dealer in Bhopal. So cost price for the dealer in Bhopal is going to be selling price of the dealer in Indore plus GST. Okay, this plus GST. So 7,000 plus what would be, there is a CGST component coming and SGST component coming. So what is going to be that figure? We have to calculate that. So 7,000 into, you can just directly do 18% here because they are not asking what is the CGST or SGST. You can directly do 18 by 100 also. So this will give you 7,000 plus 18 into 7 by 18 into 70 by 100. So this is going to be 1,260. You add it and what you're getting is 8,260 rupees. So this is going to be the cost price of the dealer. So cost price is selling price of the dealer in Indore plus GST that you have to, the Bhopal dealer has to pay.